Good morning, ladies and gentlemen. Welcome you all to the 1Q FY23 results conference call of Sagar Cements Limited. We have with us from the management Mr. Srikanth Reddy, Joint Managing Director, Mr. Rajesh Singh, Chief Marketing Officer, and Mr. Soundarajan, Company Secretary. We will now start the session today with the opening remarks from the management, and this will be then followed by a Q&A session. I request all the participants to be in the mute-only mode during the course of the call. I would now like to hand over the call to Mr. Srikanth Reddy for his opening remarks. Over to you, sir.
Yeah, thank you, Manish. Good morning, everyone. Welcome to Sagar Cements earnings call for the quarter ended June 30th, 2022. Let me begin the discussions with a brief overview of the market in terms of the demand and the pricing, post which I'll move on to Sagar specific developments. Demand for the quarter was largely benign on the account of challenging environment, inflationary environment, labor availability and heat wave, and also unseasonal, or rather season being slightly ahead in terms of the rainy season. Subsequently, overall volumes as well remained steady though they appear elevated on a Y-on-Y basis, largely owing to a low base effect. Despite muted demand, we have had to operate in a high inflationary environment wherein the price of raw materials remained considerably elevated, which in turn necessitated undertaking price hikes to help preserve overall profitability and the margins of the business. However, given the subdued demand, the industry couldn't undertake the requisite price revision, which in turn led to the profitability and margin compression during the quarter. However, we are now witnessing softening of certain raw material prices and are hopeful that with time and with the demand picking up, we should be able to deliver better performance going forward. Moving on to Sagar specific developments, our revenue for the quarter stood at rupees 558 crores as against rupees 393 crores reported during Q1 FY22, higher by 42% on a YOY basis, largely driven by volumes following the commissioning of the new capacities. Average realizations remained largely stable during the quarter. EBITDA for the quarter stood at rupees 61 crores as against rupees 107 crores generated during Q1 FY22, lower by almost 43% on a YOY basis. Margin for the current period stood at 11% as against 27% reported during corresponding period last year. Margin compression was largely owing to higher input costs. The raw material prices were fairly stubborn during the Q1, which resulted in a margin compression of almost 1600 basis points. Loss after tax for the quarter stood at rupees 13 crores as against a profit of rupees 49 crores generated during Q1 FY22. Average power and fuel cost stood at rupees 1827 per ton as against rupees 1017 per ton reported during Q1 FY22. Elevated prices of coal and petcoke resulted in higher per ton cost of power and fuel during the quarter. Freight cost for the quarter stood at rupees 798 per ton as against rupees 764 per ton during Q1 FY22. From an operational point of view, the capacity utilization stood at 57% on a consolidated basis during the quarter. As far as the key balance sheet items are concerned, the gross debt as on 30th of June 2022 stood at rupees 1490 crores, out of which 1293 crores as a long-term debt and the remaining constitutes the working capital. The net worth of the company on a consolidated basis as on 30th June 2022 stood at rupees 1639 crore. Debt equity ratio stands at 0.79:1. The cash and bank balances are at rupees 282 crores as on 30th of June 2022. To conclude, I would like to reiterate that while the near-term outlook may be slightly bit challenging, we believe our diversified geographical presence, improved product mix, and cost rationalization measures position us well to create a value for our stakeholders. We also remain on track towards scaling up on our business inorganically, and as mentioned during our previous call, we will be able to share further details on the same in next few months. We are cognizant of not overstretching our balance sheet in our pursuit of chasing scale, and will continue to work towards maintaining a right balance between the two. That concludes my opening remarks. Would now be glad to take any questions that you may have. Thank you.
Thank you, sir. We will now begin with the question and answer session. A reminder to all the participants, you can ask your question by raise of hand in the participant tab of the Zoom platform. The first question is from Shravan Shah. Please go ahead, Shravan.
Thank you, sir, Sir, first is on the we inform in the exchanges that we have board has approved the proposal to submit the proposal for the acquisition of Andhra Cement, which is in NCLT. So and then in opening remarks you mentioned in couple of months you will have a more clarity, but still trying to understand the basic understanding in terms of the valuation timeline when it will be finalized, capacity existing, and post the acquisition, what kind of a capex are we looking at? When we start seeing the revenue profitability, any color would be helpful, sir.
Yeah. Good morning, Mr. Shravan. I'm sure you, as indicated earlier, board accorded us the approval for participating in the resolution plan, but it is too soon for us to comment on the realization front and as well as the additional capex. As and when it is appropriate, we will be more than happy to come back to you on those fronts, sir. It's very strategic for us, so it is too soon for us to comment on the any of the questions that you have asked at this point of time. I'm sure you'll appreciate our position.
I understand, sir. But
on the timeline, sir, on the timeline, as indicated by the current resolution professionals team, the resolution plan needs to be submitted before 18th of August. Should get all the clearances and all somewhere around end of September to early part of October. Now, from whatever little diligence that we have done, yeah, the asset looks like it might need a 3-month kind of maintenance related issues before we could start. I mean, this is what I can broadly indicate at this point of time.
Okay, so once by September, if we get the clarity and if we get the asset, then in after 3 months the maintenance we can start seeing the revenue flowing in. That's how one should understand.
Yes, sir. I think that's our internal understanding, sir. That's a likelihood that it should take 3 months max on getting it into the production.
Okay. And in terms of the size, the capacity would be 2.5 million ton.
It is 2.6 million, sir. It's a 2.6 million with 1.8 million at the integrated plant and a 0.2 grinding capacity advised.
And the clinker is how much?
Clinker is 1.65 million.
1.65. Okay. Now coming to the operational aspect. So, any change in terms of the first coming on the volume per se? So last time we said we are looking at 5 MTPA volume for this year.
The outlook remains, sir. The outlook remains as we have seen even in Q1. We are very close to that. So outlook, we took a realistic view, so it still remains at 5, sir, for the current year.
Okay, so the incremental volume, as we mentioned last time, it would be from the new both the assets that would be the giving the growth for this year.
Yes, sir.
Okay. Now coming on the pricing, and then I will ask on the costing. So pricing, if you help us in terms of, it's good that we had a better realization this quarter. On QOQ front, despite our channel check, we are seeing a slightly lower growth. So, in which states broadly we how much increase we have seen, and now post the June, how do we see the pricing? Any correction we have witnessed, and what's the expectation?
Sir, the realization grew for us on a quarter-on-quarter at 5%, sir. Fortunately, the realization did not move downward, though unfortunately it remained stable and it did not cover the inflationary kind of input prices, but it remained stable. We believe that even in the current quarter it might look in a similar kind of a structure, though we are expecting a marginal kind of an increase, but it is too soon. We are just done close to 20 odd days into this July month, sir. And as you know that this quarter is one of the off season for us. It's a rainy season. Good that it is raining well for a long term, but on a short term it definitely is impacting the business, Mr. Shravan.
Okay. And now on the costing front, sir, particularly on the power and fuel costing. So broadly, how much further are we expecting a cost to increase this quarter? And also the second question is, in our presentation, if I look at the imported coal prices on QOQ front, what we mention is a kind of a flattish, and current price of imported coal, as mentioned in the presentation, is kind of a 70% high, versus our understanding is it has increased throughout April, May, June. So wanted your understanding on that.
Sir, I think the prices were fluctuating, especially the petcoke has come down by 10%, though it is at the middle to end of June month, sir. As you would have seen, it dropped by 10%. But unfortunately, it moved from 8,000 odd to 25,000 and came down and settled at 22,000 as we speak. The good news is that it is trending downwards. So by how much and all, it is too soon. Coming back to the imported coal, sir, though we are not aggressively procured any of the imported coal, it looks like there is a small reduction. But I think what we have indicated is definitely not the spot prices, but the average kind of a consumption kind of a pricing is what we have taken. Spot prices look to have come down a bit. It again varies from place to place and the sourcing points like Indonesian, Australian, and South Africa. Domestic coal for us remained fairly stable, though the availability is a question because during the monsoon time, some of the mines get flooded, so it could probably take some more time before it gets restored. Yeah, we are good on the stocks, so right now, for the next couple of months, we do have the inventory. But during this quarter, we don't expect major material movement, so we are good on even on clinker inventory as well as the inventory.
On total costing per se for this second quarter,
we are expecting it to be flat, sir. We are expecting it to be flat.
Okay, that's good news that now we don't expect the further increase in the coal prices. Just
for one quarter, we can keep our neck out, sir. Beyond that, again, is a challenge. But for the next quarter, we believe it is going to be flat for us.
Okay. Couple of data points. First, trade share for this quarter was how much?
65%, Sanjay. 65, sir.
Okay, it remains the same. And in terms of
our market mix and the product mix did not change to an extent, so it remained fairly stable because we do have decent exposure into the Andhra government volumes.
Okay. And lastly, on the debt, as last time mentioned that at operational net debt, we were looking at 8.5 billion.
Sir, this debt is inclusive of the debt that we have borrowed for the acquisition. So if you remove, sir, it remains close to that number. The interest cost looks to be elevated at this point of time, but as you know, we are posting the interest cost. But once the acquisition is concluded, I think it will get capitalized, sir. So that's the position for us. The net debt for excluding the potential acquisition, we still remain sub 800. That's what we have indicated, and that position remains fairly there.
Okay. Thank you and all the best, sir.
Thank you.
Thank you. Anyone who has a question may indicate by raise of hands. So in the meanwhile, the question comes up. One question from my side, sir. Sir, in terms of coal inventory and current coal procurement from Singareni, what is the price that we are currently getting it at, and what would be the inventory cost?
Yeah, the inclusive of inventory cost, it is at 2 rupees per 100 kcal, Manish. So that remains fairly stable there. Okay. The only variable in this is, again, if we have to go for a far off mine in this thing, it could marginally go up by maybe 1 to 4 paise. But the average holding cost for us on the is sub 2 rupees for every 100 kcal.
Got it, sir. And sir, on the any comment on the Russian coal that is coming in, has started coming in? It's almost 20% cheaper is what we understand. Is that coming on the southern side also, or is it only?
Yeah, we have seen some of the coal hitting Vizag port, at least in our operational area. Okay. Yeah, we have seen it is hovering anywhere between $165 to $170 on a shift basis to the port. Yeah, which definitely looks like is discounted to the other coals. But we have not sourced any of that, because in our case it would still be a lot more expensive than the domestic coal. So we are yet to try the Russian coal, Mr. Manish.
Got it, sir. Thank you. The next question is from Sanjay Nandi. Please go ahead, Sanjay.
Yeah, good morning, sir.
Good morning, sir.
So just to mention, like we have an inventory for like couple of months going forward. So like the same pressure will be there for next month as well, sir, because we are having a high cost inventory of the coal. So the same thing will continue for the next quarter, right?
Yeah, it would remain very similar, sir, because our challenge is more on petcoke, because we are using 100% petcoke for our Madhya Pradesh plant.
Okay.
And we are using limited petcoke, though we are using some petcoke at both Gudipadu and Mattampally, but that is limited. That is putting some pressure, but the domestic coal is fairly stable. So, but during this quarter, the volumes may not be as high. So we should be good to tide over the situation. Given the scenario, we think that the cost should remain flat from Q1 and Q2 should be very, very similar, Mr. Sanjay.
So, sir, if the price drop which we can see from the petcoke and the international coal as well, like 10-15% kind of drop from the peak. So, what kind of benefit will be accruing? Like from which month that will be accruing, sir? Like mostly in the Q3 or in Q4?
We typically average it out, sir. So, I think the real this thing we should get from middle to end of Q3 onwards, sir.
Middle to end of. Like the full thing will come from Q4 onwards, right, sir?
That's the assumption, sir.
If the things. Okay. So what is the pricing scenario like? Like the prices have corrected a lot from that May thing, because sir, obviously because of the monsoon things.
See, right now I can give you up to 15th of July pricing, sir. Like Bangalore, prices have moved up by 5 to 10 rupees per bag. Okay. Chennai remained more or less flat with for us it increased by 5 rupees.
Okay.
Solapur remained flat. Pune remained flat. Barampur, there is a slight drop. Not slight, it is around 10 rupees drop. Yeah, Bhubaneswar is again a 10 rupee drop. Coming back to Telangana, yeah, it's more or less flat. Hyderabad, again, we have seen a 5 rupees increase. Not the coastal AP, that is Vizag, yeah, increase is around 5 rupees. Central coastal, again, is a 5 rupees increase. Rayalaseema remained flat, sir. I mean, this is what is our observation. Again, this is only into the 15 days we are talking of, from June exit to till 15th of July.
Got it. And sir, what is the net debt standing in the books? Is it 1200 crores?
Yeah, 1290 odd crores. This includes the 500 odd crores that we have borrowed for the acquisition, Mr. Nandi.
Okay. So 1290 is the net debt figure, including that?
Around 1200, sir. Around
1200.
Yeah, 1208 to be precise.
1208, right. So it includes the 500 crore thing which we have borrowed.
Yes.
Okay. So what would be the repayment structure like going forward?
Sir, it's a long tenure debts is what we are sitting on them. So we have structured, but would be very happy to share the tenure for each of the loan. We have multiple loans, sir. Each of them have their own tenure. But for us, it's a long drawn kind of a schedule, sir.
Long drawn. Okay. Got it, sir. So as of now, that's from my side, sir. I'll join back in the queue, sir. Thank you so much, sir.
Thank you.
Thank you. The next question is from Sunny Agarwal. Please go ahead.
Thanks for the opportunity. Sir, I would like to understand slightly demand supply scenario from medium to long term perspective, especially in the light of wherein the government is under pressure to, garner tax revenue, so they may curtail some capex at one end. And on the other end, guys like Ultratech, Adani, or Shree Cement, they have announced an aggressive expansion plan over next 3 to 4 years. So just from a medium to long term perspective, you can throw some light on demand and supply. Thank you.
Sir, I think the cement demand for a short term might look a bit challenging, though it's still growing, but it's growing at mid to low single digit kind of a number. But long term looks promising, sir. So most of the announcements that are coming, I think they are to cater to the medium to long term kind of a demand. So our belief is it is still 24 to 28 months away. So by that time, we are more than hopeful that we should have completed the elections and we would have been into the next running of it. Our past experience is the demand shoots up a year and a half or 2 years before the election. So that's what most of us are gearing up for. And the medium term to long term looks promising, sir. Historically, the cement demand doubled every 10 years. So if it has to double 10 years, I'm sure we'll be falling short of the capacity. So for some period, there could be optically looking like an excess kind of a supply, but we are reasonably confident that on a medium to long term horizon, the gap should actually narrow down, or the demand probably should shoot slightly ahead of supply. I'm talking of all India, sir. But if you look at some regions, especially South, I think for next 10 years, probably the supply is going to be more than the demand. But again, the problem with our sector is that, we have much higher nameplate capacities, which could be true on the grinding, but the real clinker and the conversion factor would probably may not be as high as it looks, sir. So that might optically make people think that we are having too much of supply, but in reality, the gap may not be more than 10 to 15%, sir, as we speak. Which we are more than hopeful that over a 5 to 10 year horizon, the gap should narrow down even to a low single digit is what we think. That's what probably is making some of the sectorial players to invest and be prepared to handle that kind of a situation is what we strongly think, Mr. Alpha.
Yeah, thank you, sir.
Thank you.
Thank you. Anyone who has a question may indicate by raise of hands. We have the next question from Amit Srivastava. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, just wanted your thoughts on a newer capacity which has come up on Jeerabad and Jajpur. So how is the ramp up in terms of the volume as well as the profitability? Because if I look at the standalone number, the EBITDA per ton is 650 plus. Where the console is lower. So it's indicating that these units are not yet contributing in a full phase. So how we are looking at in our future after 6 months, now 9 months, once the actually ramp up will happen in terms of the profitability, and what is the thought process over there when it can happen in terms of the profitability and the optimum level? Yeah, that's it.
Yeah, good morning, Amit. As you have rightly said, the two assets are in ramp-up phase. We are doing an average 40% capacity utilization, slightly more than 40% capacity utilization at Jeerabad. Yeah, it's close to 46% capacity utilization at Jeerabad on the volume front. Yeah, on the technical side, the plant has touched 100% capacity utilization only during the second fortnight of June. With the coal and everything, the thermal consumption and everything also getting full-fledged. The full-fledged waste heat recovery also got commissioned during the last week of June. So that should help us mitigate on the cost side. And once this off-season is over, we are more than confident that the ramp-up at Jeerabad should be much faster than what we initially indicated or expected. Going to Jajpur, sir. Jajpur just started. So the average capacity utilization is sub 10% as we speak. We were waiting for some of the approvals for some of the product, that is the composite cement and all. We just received the ad hoc permission from BIS for that particular product. So with all these approvals coming in, I think post this season, we are more than hopeful that we should reach to 35 to 40% capacity utilization in that particular asset. I think once these two assets slowly start getting back to normal, the real margin would start getting reflected. As you have rightly said, the standalone numbers are much higher. There has been a drag because unfortunately these things did not ramp up in time. Though we have indicated that the ramp up could take for the second half. Internally, we were hoping that it should have happened slightly before. But in the current year, we are more than hopeful that both the operations at both these assets should stabilize and start contributing rather than being a drag.
Yeah, it's helpful, sir. Second, sir, just on a follow-up of 5 million ton which you have guided. So there mostly we are taking it the growth of incremental whatever we are looking at is from the newer capacity ramp up.
Yes, sir. I think we indicated even earlier that 3.6 million could at the best become 3.7 million in the assets here, and the rest around 1.3 to 1.4 million has to come from those two assets. They are comfortably in a position to do that, Mr. Ahmed. So we don't see that as a challenge.
Yeah. So if the south growth will be better, then we can get further upside on that.
Yeah, but the issue, as indicated, sir, being the industry player, if you look rationally and logically, there are some ramp ups and there are some commissioning that has happened in this region.
Okay.
The growth is in a low single digit in south, so it would be very unfair for us to assume that we would be growing when market itself is growing at a slower pace. So that's one of the reasons why we have clearly indicated that we expect it to be flat for the areas that we operate, and the incremental volume is coming from the places where we have just commissioned stuff. That could be a bonus, which we are not expecting either way.
Yes. Thank you, sir. It's
Thank you.
helpful. Yeah.
Thank you, Mr.
Thank you. The next question is from Himanshu Yadav. Please go ahead.
Thanks for the opportunity, sir. Could you just provide some comments on pricing situation? I mean, we understand that monsoon months, obviously the demand is, seasonally weak. But in terms of, if we see some fuel cost reduction coming in and fuel prices decline, do you think these will be absorbed by the companies or players in the industry? I mean, are you seeing any pressure in terms of passing on those reduction in prices to the end user?
Yeah, Mr. Himanshu, I think end users are getting the best of the benefit. Even at such a high inflationary kind of a thing, the realizations did not move up much. Now, will it come down? The realizations, will it come down when the price is coming down? I think only time will tell. But our belief is, as you'd have seen, the margins have actually come down by less than half of what normally the industry has delivered. So it's a function of time, sir. But we internally believe that the realizations should go up for us to sustainably survive in this particular market. That's what we internally think, and we strongly believe that it has to move up to catch up with the inflationary kind of a thing. Though the prices, the input prices looks to come down, but as told earlier, they were sub 7,000-8,000 rupees per ton for each of the coals, sir. They are almost 3 times more than what they used to be exactly a year back. So, and they are coming down slowly. So there is a huge pressure on that. Till it normally stabilizes, sir, I don't see further reduction in prices. We believe it has to move up for us to survive. That's what is our thinking and belief, and we seriously hope for that to happen.
Thank you. That was my one question.
Thank you.
Thank you. The next question is from Shravan Shah. Please go ahead.
Hi. Sir, 2-3 things. First, in terms of the blended cement, slowly we are inching up. So now at 50%. So last time we said 60% that we are targeting. So that remains the same.
Yes, sir. Because as indicated earlier, sir, the ramp up at Jajpur as well as Zirabad should help us achieve that number, sir. Should help us achieve that number. Okay. Second, just wanted to understand this time it's good that our lead distance has come down from 283 odd kilometer to 268 kilometers. But in terms of the freight cost per ton has increased 3 odd %. So is it fair to assume that the entire fuel cost increase has already there, and now we can start seeing the slightly higher reduction in the freight cost per ton? Sir, we did indicate that our objectively we intend to be less than 300 and slowly inching towards 275. Yeah, with the reduction of lead distances, it is logical to assume that the overall freight cost should come down. But some of the tollages and some of the transport contractors had to be, we had to compensate for their overheads with this inflationary pressure. What you are seeing is only the diesel price alone, sir, but there are other inflationary pressures even for them, for their manpower and the other tollage costs and everything is going up. Yeah, we do expect the savings, but the bigger saving in our case is the strategically reducing the lead distance. That should proportionately start impacting as long as the fuel and other inflationary prices remain constant. We should see a saving. But at this point of time, the other inflationary costs other than fuel are also got adjusted. But we strongly think that if all the things remain stable, the freight cost should definitely come down for us.
Okay. Other thing is in terms of this quarter, we have seen a significant increase in other income from 4 odd crore to 12 crore plus. So is it the extra debt that we have raised, we maybe have partially used as a treasury gain?
It's a mix of many things. But these are one-offs, sir. These are one-offs. So these are not something which you should factor. Yeah, these are one-offs.
Okay, got it. And second, sir, a broader thought in terms of normally whatever our strategy is to keep on doubling the capacity.
Every 10 years.
Every 10 years. So now with Andhra Cement would be there, so we would be 10 plus capacity. So what's the next plan and when
every 10 years it will double, sir. Every 10 years, if the earlier indicated was to become a 10 million by 2025 and 20 million by 2035. Yeah, that remains. That narration remains for us.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from Rajesh Ravi. Please go ahead.
Yeah, hi. Good afternoon. Could you share the regional breakup broadly, sales in South, East and Central together and West? Any broad percentage? Because just wanted to understand your realization from whatever assessment you have earlier discussed, shared. East market, you have seen strong pricing. West and South, the prices has been more flattish to, a few markets have seen price improvement. So where is this 5% realization growth coming in from?
Yeah, Mr. Rajesh, I will broadly tell you, but the real numbers.
Broadly. Yes.
See, our Telangana contributes close to 27%, sir. AP contributes 31%, Karnataka 6, Maharashtra 6, Tamil Nadu 12, Odisha 7, Madhya Pradesh 9, and other states remain at 1%, which broadly is in line with what we have done even during the last year same time, sir, as a percentages.
Okay.
Now, specifically going to the realization which moved up, the Orissa is the only place and the other contributed quite significantly. The places where we were slightly negative were in Karnataka and Tamil Nadu, sir. The rest everything remained flat or positive. We have seen a 6% gain in Maharashtra. But what you should be mindful of this, Mr. Rajesh, is that it also is to do with the product mix change, because from earlier to now, there is a shift. The distances would have changed, the things would have altered. So broadly, I think we would be happy to share those specific details.
Sure. So it's more to add with you, increasing share of trade and blended cement sales.
No, blended cement typically might put downward pressure in terms of realization. Margin could be flat or positive, but there probably could have been some higher sale in OPC in certain segments where the contribution could have been higher.
Okay.
And what you have to be mindful, sir, the AP government supply prices have gone up.
Okay.
Yeah, it has gone up by 15 rupees per bag also.
Okay. So that is a major contributor.
Yeah, 1.5. It is 1.5.
Yeah, 1.5 rupees.
That alone is not, but that also did contribute.
Yeah, that also contributed. Okay.
Yes, sir.
Okay. And second is, in terms of the demand number, your assessment, the monthly assessments, indicates that South market is showing strong traction, even if we look beyond FY21 or 20.
Sir, the problem is not with the demand, sir. The problem has been with the lackluster demand. So it's on and off. That actually is creating the pressure on the market. So whatever order that is coming to the market, once it is not there for a couple of days, people tend to pick up at whatever is the price. That indirectly is putting the pressure. So we don't see a big challenge with the demand as long as you see it the way we see it, because people expect it to ramp up very fast, but it has been very stable, sir. It has been very stable.
Okay. And sir, when you talk about subsidiaries, currently only these two are your subsidiaries, right? The Jeerabad and the Jajpur units.
Yes, sir.
And the rest, both the Vibram and the BMM are amalgamated.
Vibram was always the part of the asset, so it.
Correct.
So the Gudipadu got merged last year.
Yes. Okay. So when we look standalone number, we are just excluding these two new units.
Yes, sir.
Okay. Great, sir. Last question on the costing. While your presentation, you are saying that the sequential Q2 costs are much higher in terms of imported coal prices shooting up 70% plus and all. You are still expecting your cost to be flattish Q on Q.
These are two things separately, Mr. Rajesh. We don't use imported coal at all. So impacting our cost doesn't arise. We have just indicated the imported coal prices in general. We are not using any of it, Mr. Rajesh.
Okay. So because of your usage of petcoke and domestic coal, you are expecting the cost to
remain flat, because there is some saving that we have already started seeing, but it might be back-ended, may not be in this quarter, but it in subsequent quarter. We expect it to be flat. We are not expecting it to move higher or come lower. We are expecting it to be flat.
Okay. And sir, one last question. These two new entities at EBITDA level, and on what utilization you are expecting them to break even at least?
Sir, it's a complicated question, Mr. Rajesh. It is to do with the realization. So so it is not just the utilization alone, but if realizations move up even at a lower capacity utilization, it should. But our experience is that at Jeerabad, even a 50% capacity utilization should help us be EBITDA positive.
Okay.
Should be close to around 40% capacity utilization. That's what. If everything remains.
So Q4, you are expecting those numbers to be achieved?
We are hoping for that.
Okay. Great, sir. Thank you. I'll come back in queue.
Thank you.
Thank you. So the next question is from Tanesha on the chat. After some recovery seen in June 22, how has the demand been in July 22? Has there been any improvement? Also, if you could give some regional flavor.
Yeah, now the demand related issue, it's a very seasonal issue, Mr. Manish. I'm sure you appreciate that they cannot be compared month on a month for at least for this season. As seen, it's too soon. But if I have to compare with June to first 15 days of this July, it definitely dropped because season is on. So as indicated, though for a short term it looks difficult, but for a long term, from an economy perspective, it looks very, very promising because the rains are much higher than normal is what they have indicated. And all the reservoirs are almost close to the full couple of months ahead of time. So that's a good sign for agriculture and the economy. But for a short term, it looks challenging because it started raining good 15 days to 20 days ahead of schedule. That is what is making the demand numbers look lower. But that's the season. I mean, 25%.
Thank you, sir. The next question is from Amit Murarka. Please go ahead, Amit.
Hi. Good morning, everyone. So just my question is again on power fuel. So from the slide, I can see the numbers are higher than the first quarter numbers. So just wanted to check the understanding that was there is that the petcoke has come off from a level of $250 to $220 odd. So why is the spot prices then showing higher than the prior quarter?
Yeah, they are what they are, sir. We have not done anything.
Okay.
That's what we have indicated about what the spot prices are. That's what we have indicated in our presentation.
Right.
When it comes to our own consumption, sir, they are blended. You know that we do it on a weighted average. So they are trending down, but by the time the low-cost petcoke or relatively low-cost petcoke would hit us, it will be middle to end of Q3, Mr.
Right. And does this cost that you indicate also include that 10% custom duty? This is the landed cost.
It's all in landed cost at each of our sites.
Right. And I just missed the geographical breakup that you shared of your various states.
I would share that with you, Mr. Amit.
Okay.
It's optical, so I'm sure it will be a challenge for me to read out, but would be more than happy to share those numbers.
Okay, sure. Thank you.
Thank you. The next question is from Vincent Andrews. Please go ahead. Vincent Andrews, please go ahead with your question. Unmute your line.
Sorry, it was muted. Good morning. Thanks for the opportunity. I have only one question. See, the net debt currently it is at 1,290. So, what will be the repayment for this, including the addition that you have taken for FY23 and 24?
What is the current full year? Yeah, it will be very close to 100 crores would be the principal repayment would be close to 100 crores, Mr. Vincent.
Yeah.
But it is structured in a similar way for next 7-8 years, sir. So our net debt at this point of time is 1208. That includes 500 crores of money that we have borrowed for the acquisition, Mr. Vincent.
Okay. So, one more question. So, for the Andhra Cement, I just want to confirm the clinker capacity is at 1.65 and grinding capacity is at 2.6, right?
Yes, sir. See, these are as indicated by the RP, sir, which of course our people did do the technical diligence. So, yeah, it is at 1.65 million clinker. 1.8 million ton grinding at the integrated plant in Dachepalli in Guntur district of Andhra Pradesh, and a 0.8 million ton grinding capacity in Vizag in Andhra Pradesh.
Okay. Thank you. And out of this 48 crore interest cost in this quarter, how much it will be getting capitalized post the acquisition?
Sir, I think let me give you the precise numbers in due course of time and in an offline. Yeah, we are expecting that this trends to continue for even for into Q3. Once the asset, any of the asset that we are targeting to acquire, then it will get capitalized, sir. Till such time, I think this would exist in the book.
Okay.
How much of it would be the contribution? Yeah, I think close to around 15 crores would come from this additional borrowing of 500 crores for acquisition, Mr. Vincent.
Okay. Thank you. That's from my end. Thank you.
Thank you. Sir, a couple of questions from the chat box from Mr. Pradeep. What is the fuel mix, domestic coal and petcoke ratio?
Sir, it is 70-30, sir. It is 70% domestic coal and 30% petcoke.
Thank you. Sir, next question is from Nikhil Deshpande. Has the entire 500 acquisition debt fully drawn, and have you received the 350 crore from Premji?
Yeah, it's fully drawn as far as the acquisition funding is concerned, and we received the entire 350 crores from the Premji for their equity participations. Yes, we did receive both.
Thank you, sir. The next question is from Keshav Lahoti. Please go ahead, Keshav.
Sir, your other expense have decreased by 100 million in this quarter. I think it's more to do with the ramp up of the new plant. So is it fair to assume now in this quarter there is no one-off expense in other expense?
Sir, as you have rightly said, most of the ramp up has already completed. Yeah, some of the one-off expenditure is pertaining to the legal, pertaining to the acquisitions and all. Yeah, more or less we have done with most of them, sir. But even if they should be very, very marginal.
Okay. One more question from my side. The fuel mix in Q2 will also be stable?
Yes, sir. I think we are more or less expecting. Yeah, there could be a small change where the domestic coal could slightly come down, petcoke could go up because we are trying to manage the moisture. So typically petcoke could be a better choice. So we might see a slight increase in petcoke utilization, but by few basis points only, sir. That shift could be shifting by few basis points. That's it.
Okay. Thank you. That's it from us.
Thank you.
The next question is from Shravan. Please go ahead, Shravan.
Hi. Sir, in terms of the capex, last time we said it is only the 30 crore. So that remains the same or
yes, sir.
any change?
That remains the same, sir. That remains the same. The maintenance capex remains at 30 crores. Sub 30 crores.
Okay. Okay. And just on the tax rate front for the full year on the P&L front in the reporting purpose.
We should be in MAT, sir.
Okay. So this is including the deferred tax we are saying or
yes, sir. Yes, sir. It's inclusive because with the merger of Gudipadu, I think we are back to the MAT and yeah.
Okay. 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 Thank you.
Thank you.
Thank you. The next question is from Harshit. Please go ahead.
Yeah, hi sir. Thank you. Just one question that on the power and fuel costing, we follow first in, first out methodology.
We do the weighted average.
Okay. So the 30% domestic petcoke which we use, what is the price at this point of time?
Yeah, KCAL. Average.
Indian petcoke, it is 2.71.
Yeah, it is 2.71 for 100 kcal, Mr. Toshima.
So our inventory cost and weighted average cost, which we are having right now, it's largely same.
Yes, it has to be. Yeah. Because the shift only happened, the reduction only happened during the last fortnight or the last week of June, Mr. Toshima. So the real impact would be felt only, as mentioned, in the middle of next quarter.
And sir, if I may ask, how many months of coal how many months of fuel do we carry as inventory?
Yeah, at 100% capacity utilization, sir. We have domestic coal for 2 months and petcoke for around 45 days.
45 days. Yeah.
We don't operate at 100%, so that would translate to we are
2 months
of the current quarter. Yeah.
Got it. Sure. Thank you, sir.
Thank you.
And one more thing, if I may ask. So that 10 million ton is something, if Andhra plant goes along with our plan, then that 10 million ton is something which are going to be there even in FY23 end itself. So just want to understand that the 500 crore additional funds which we have, is that largely going to get consumed for this capacity? Or
yes,
we have
I think what you should look at is this money was earmarked for the acquisition, sir. So, and that's the debt. Probably at the best it could go up by another 100 crores more. That we should start reflecting at 10 plus million tons for close to 1500 odd crores on a higher side. That includes working capital and everything.
No, I said didn't get the last part. So basically we reached 10 million ton by end of FY23 itself, and a large part of debt which we have, the 500 crores.
Exactly, it's going to remain the same, sir. That we are already sitting on the debt for the potential acquisition. So debt numbers would not change, but the capacity.
Understood. Got it. Perfect. Thank you, sir.
Thank you.
Thank you. So the next question is from Abhishek Lodhia. Is demand elastic to change in price? Because we have seen higher volume at highest prices. So does lowering price help to push volume?
Sir, these commodities influence on the overall cost of construction, be it house or any other project, is very, very limited. Historically, we have never seen higher price compressing the demand or vice versa. The lower price accelerating. Yeah, what we have seen is only if at a very high inflationary kind of a pressure on the building material, some small deferment is what we have seen, but we have never seen any correlation vis-a-vis to price to demand. We have never seen any inversely kind of a correlation or a positive correlation. We have never seen any of that in the past.
Thank you. So next question is from Amit. Please go ahead, Amit Maratha.
Yeah, hi. Just on the fuel sourcing bit, like generally, I remember in the past you mentioned that during monsoons you generally raise your inventory holding, and what you said that is, as of now, you would have 2 months of inventory. So is there a change in strategy?
No, we have not changed anything in our strategy, Amit. Since the inflation has hit us hard for last 3 quarters, yeah, we are not aggressively procuring it because we always think that once we buy, if prices come down, it would impact. So we slowly have reduced from 6 months to 3 months now. What we have indicated is at 100% capacity utilization, so which we are not doing either way. So this actually is very close to 3.5 to 4 months of our fuel requirement. We did reduce it from 6 months to close to 4 months or 3.5 months. That we have done because of the very high cost and very volatile kind of pricing regime on those fuels. We would be very happy to revert back to that 6 months as soon as we see some stable kind of a pricing on the fuel side.
Sure, that's fair, understood. And also on Singareni, like given that the alternatives are so much more expensive, what kind of, or what is the periodicity of this agreement you have with Singareni? Is it like 6 months?
These are FSAs which are long term, but agreement needs to be entered every year. So everything is in place for us for the fuel supply.
Okay, but the pricing can be revised.
The pricing is dynamic. See, the FSA is perpetual only for the supply, sir. It has nothing to do with the pricing. Pricing is very dynamic. There is no agreement for the price.
Sure. Thank you.
Thank you. Anyone who has a question may indicate by raise of hand. As there are no further questions, I would now hand over the call to Mr. Reddy for his closing comments. Over to you, sir.
We would like to once again thank you for joining on the call. I hope you got all the answers you were looking for. Please feel free to contact our team at Sagar or CDR should you need any further information or you have any further queries, and we'd be more than happy to discuss them with you. Thank you and have a good day. And thank you, Manish.
Thank you, sir. That concludes the call. We may now disconnect.